Shares of Anheuser-Busch are in focus this morning after a Jefferies analyst downgraded the beer maker from buy to hold and lowered its price target down to $54 from $68, saying that the beer stock is not as cheap as it looks. And perhaps it's not, Brad. AB InBev, of course, is still dealing with rising costs of doing business, whether it's barley. It's also dealing with can shortages. It's not an AB InBev thing. It's a broader industry environment or food industry thing. But still, their top pick is Carlsberg and Heineken. So at least the folks over at Jefferies are going long a Heineken over Budweiser.
grabbing the Heinies on the weekends, okay?
Grabbing the Heinies.
I mean, when we think about the entire sector, it really does come back to, or this industry rather, comes back to the shift in some of the consumer tastes too that the pandemic has really set on. You saw less of the just standard consumption of beers that may have been on tap at your local watering hole, and more of the shift towards some of the wines, some of the spirits as well. And we've seen in the wines and spirits category, and also I guess I have to give a nod to the fizzy drinks or the spiked canned drinks. So ultimately, with all of that shift in consumer profiles, what does that net out for the beer companies of the world? And have they made enough of a pivot in this near-term period, whether that be via acquisition or whether that be via something homegrown, in order to retain that consumer appetite too?
And here's today's deep thought. If we were going into a recession, wouldn't you trade down to Budweiser and Bud Light? Isn't that the cheaper beer relative to a Heineken? Isn't Heineken more expensive?
If
you have some money, you're going Heineken. You're not rolling up with a Budweiser.
I think in the recession, I just want the hardest thing I can get my hands on in the liquor space.
Wow.
Well, guys, coming up on the other side of the short break, Yahoo Finance's Inez Ferrer will break down the latest market action as fears surrounding the extensive Fed tightening, it persists. That's next.